cable is breaking support on the daily chart. It is breaking trendline support as well on the daily chart. It's now on the back side of the trendline support, so this is now a counter trendline. The market has come down and back in to those shorts on the daily. It's done so in a 78.6 Fibonacci retracement, regarded as about as high as a correction can come before failing to give the fuel for the downside in terms of a bearish scenario. So in this respect, it's come up about as far as it can without continuing to give a bearish bias. If, on the other hand, it were to break that level, the 78.6, the 2720s, the thesis would be that this is going to continue up and therefore erode the bearish bias. And there will be prospects of a break of resistance, the swing high. And if that were to break, then we're now looking at this sort of scenario. But currently that is not the case. So we're not looking for that move. Instead, we are looking for this. So that's where we're at on the daily chart. Support will be down here, as we've seen already. And we'll be targeting all the way down here for a long-term target. And the prospects of support in and around 124.86 as well. Now, in order to gauge as to whether it would be a good time to try and look for the short, you can come down to a lower time frame, such as the 1 hour, and start looking at this structure. And what we're seeing is support that is yet to break. So while we're on the front side of that, we don't know that this market's coming down. So unfortunately, the lows are pretty low down. That is the structure 126.58 that is supporting so far. That is a supporting area on the charts. So ideally, we want to see a break of that to confirm the bearish bias for the prospects of the move lower. Now, some would argue that we've already had a move up into the resistance as a liquidity grab to fuel the bias to the downside. Some may have been shorting in here in anticipation of the move lower, considering we broke this low here. We came up, moved up, broke it, we broke the structure there, we've moved back up into liquidity to come lower. That's fine, but you might be prudent in waiting for the break of structure here for the move lower. So coming up, breaking structure, sell limit, move lower. At least then you'll be on the backside of the bullish trend. You've broken structure, this structure point here. So you've got a higher probability that the market is now bearish, staying bearish for the continuation lower. You can have your short. See, at this point you would have probably likely built structure, the stop to be below or above rather, and you're targeting whatever it is that you're targeting to the downside. You can draw your fib at the high of the correction, might be your first target somewhere in here. Stop on the higher moment, and ideally aiming for lower lower.